Good afternoon. I'm Doug Loud, speaking for O&M Partners, and I want to welcome everyone to this afternoon's Bravada Gold Corporation Town Hall webinar. For those of you who are new to these broadcasts, about 7 years ago, in 2014, O&M recognized a sea change that was occurring in the non-deal investment marketing world. Suddenly, information was much more available to a whole new generation of investors that couldn't ordinarily be found in the key financial centers. Today, as you know, investors are receiving information at home or their offices that used to just be geared and available to professional investors. For those of you who need to know, the Bravada Gold Corp trades under the symbols BVA on the TSXV and BRTN on the OTC. Now remember, after the presentation, there's going to be a Q&A period. The questions in the Q&A period are for everyone. This broadcast tends to answer questions many people didn't even know to ask. Questions can easily be asked by going to the question portal of the GoToWebinar menu or by emailing us. Any questions remain unanswered at the end of the webinar, we will follow up on in a timely manner after the call. For those of you who've dialed in with your phone, unfortunately, the only way you can hear our pre-recorded introductory presentation, which today is live, so you can hear it on your computer speakers, forget all that. You will hear a main presentation and for about 7 or 8 minutes, so stay tuned. Today, the introductory speaker, live not a movie, is Larry Page, a director of Bravado. Larry Page obtained his law degree from the University of British Columbia in 1964 and was called to the bar of British Columbia in 1965, where he practiced in the areas of natural resource law and corporate and securities law. Throughout his experience with natural resource companies, and in particular precious metals development, Larry established a unique relationship with financiers, geologists, and consultants, and he's been counsel for public companies which have discovered and developed producing mines in North America. Specifically, he has been a director and officer of companies which have discovered and brought into production the David Bell and Page Williams mines in Ontario, the Snip, Calpine and Eskay Creek and Mascot gold mines in British Columbia, as well as the discovery of the Penasquito mine in Mexico. Larry is the principal of the Manex Resource Group of Vancouver, and they provide administrative, financial, corporate finance, and geological services to a number of public companies in the mineral resource sector. Larry currently serves as a director of 4 companies, including Bravada Gold, Equity Metals Corporation, Southern Silver, and Valterra Resource. Now here's Larry.
Thank you very much, Doug. I think I pushed all the right buttons, and I hope everybody can hear and see me.
We can, yes.
Thanks. What we're going to hear today is the Bravada Company, which is headquartered operationally in Reno, Nevada, and has its array of properties in Nevada. Joe Keesis, who's the president of the company, we'll tell you about that, but I thought it might be useful for you to have a few minutes of context as to why we believe that Bravada is ahead of the running of the hundreds of other junior hopefuls that are on the TSX exchange. And that is because it's a member of the Manex Resource Group, and has the ability to have access to resources that a lot of juniors don't have or can't afford. Many years ago, I formed the Manex company. It's a private company. It operates 5 junior explorers that are listed on the TSX and in the United States. And the idea is to provide all of the expertise on a cost-efficient basis to the junior companies, so that they can deploy their money into the ground. We have an experienced staff that's been around for about 20 years dealing with fundraising, which is one of the important elements of any junior, through to geology, to engineering, and investor relations. So Having said that, it might be useful for you to understand where we operate. We made the decision many years ago to operate in North America. And the reason for that was we were on the same time zone. It was easy to get to properties, and it's easy to deploy staff, etc. I must say that during the COVID time, I broke my rule. And one of the companies, the Volterra company, is operating in Brazil. It's just an opportunity that presented itself. And perhaps at one stage I can tell you a little bit more about that company. But other than that, presently we have two drills turning in Durango, Mexico, in the Southern Silver Company. In British Columbia, we're rehabilitating a gold mine in a very prolific district. We have a drill turning there. Joe is operating in Nevada, where he's been for a number of years, and he'll tell you that he'll soon recommence drilling. And the Quartz company has a wonderful position in the copper space in Yerington, Nevada. It's more of a standalone, but we provide services to it and are invested in it. So having said that, we believe obviously that the space is very risky. And it's high risk, high reward, and we try to decrease the risk as we can with the provision of services, so that the majority of money that a junior raises, and we're very instrumental in assisting with raising capital, goes into the ground. We're not heavy on administration in any of the companies, and specifically the Bravada company. Joe will tell you about that. So the idea is to de-risk, and the second part is juniors are either completing a financing or they're starting a financing. That's the catalyst that allows exploration and development, and we're good at that. And we assist the juniors. We've raised over $25 million in 2020. We've got a couple of financings on the go in 2021. And collateral with that is investor relations. We reach out, we talk to our shareholders, we keep them advised of what's happening. We're always happy to introduce ourselves to new shareholders, doing what we're doing with the Otis and Mandy Group. They've been a big supporter, and we've had a relationship for a number of years. So those are the kind of the building blocks as to what we do. And having said that, you're interested in hearing what the asset value of the Bravada company is, how it's going to progress its property, and more importantly, how the ticker price is going to appreciate over time. So that's me. I'm standing by, and I'll be happy to respond to questions. I'm heavily invested in the Bravada company. I'm here for the long haul, and I'll listen with interest to Joe's presentation. So thanks very much for listening to me, and I hope to have a chat with you as the program progresses.
Thank you very much, Larry. That was very interesting. Today, our presenter today is going to be Joe Kiesis, but first let me correct an error. Apparently, there are multiple symbols for Bravada, and on the OTCQB, you want to have BGA Victor Frank, Boy George Anthony Victor Frank, rather than the symbol I issued before. On to Joe Kiesis. Mr. Kiesis is a registered geologist and a certified professional geologist with a BS in geology from Kent State University and an MS in geology from the University of Colorado. He has 40 years of experience in exploration for gold, silver, copper, molybdenum, lead, zinc, and uranium in the US, Canada, and abroad. He's the president and a director of Bravada Gold and Equity Metals Corporation, and previously of Homestake Resource as well as Fortune River Resource. Mr. Keyes has held numerous executive positions and directorships with Fairmile Gold Tech, Sierra Geothermal, and the Geologic Society of Nevada and the GSN Foundation. Now here's Joe.
Okay. All right. You should be there. Okay.
Here's Joe.
Yes. Thank you, Doug. Okay. And I'm going to share my screen here. Scott, you need to send me a share.
You're on, actually. Just go into full screen slideshow mode, and then we're good to go.
Okay, very good. All right, well, thanks once again. So I'm going to talk about the Bravada Group, as we mentioned, and you have the symbols down here as we had discussed earlier. So this is one of our main projects here, probably our flagship project, the Wind Mountain property. It's in northwestern Nevada. It is a previous producer. As you can see here, there's two small pits. This is one of them. There's another one to the north. As you can see off in the distance here, this is a very sparsely populated part of the state. So, you know, we don't expect to have any objection to, you know, enlarging a mine that was previously there. There's a geothermal plant just to the south of us, about 6 miles away. There's an industrial farm off to the west, and you know, there's not a whole lot of activity in this area. There was a mine that was shut down a few years ago, so there's a number of groups of people that I think would be very, very happy to have us reopen this mine. Environmentally, we've done some background studies, and we don't anticipate any problems. So with those forward-looking statements, I'm going to make some more because we're an exploration group. So why would you be interested in Bravada? There's a couple of things I'd like to point out. So we've looked at exploration as sort of a portfolio approach. We've acquired a number of projects over the years. Some of those we've advanced, many of them we've dropped back. So we are now sitting with a portfolio of 10 projects that we think have good merit. So one of the reasons that we're interested in exploration specifically is there's been such a small amount of true exploration for new projects for many years now, with lower gold prices, and major new discoveries are just getting harder and harder to find, and that's not just in Nevada, that is also worldwide. So we try to apply large amount of science. We're very persistent, and we try to do some creative thinking about where we can find the next major gold deposit. We're focused on Nevada because it's one of the top ranked areas in the world, not only for mineral exploration, but also development and mining. The state is overall very, very supportive of mining. It's a big part of the economy here. So I've been working in Nevada for a long time, since 1976, I believe. Bravada and predecessor companies have been active in Nevada for the last 18 years. And as I mentioned, we're evolving this portfolio of projects, and we have been very successful in attracting major mining companies to joint venture with us. So it's a bit of a hybrid model. We're not a pure joint venture company, because there are times when the market is such that we can add a lot more value by bringing some drilling to the project and advancing it in that way. And when we do that, basically we're de-risking an exploration project to, let's say, a pre-development project, something in that order. And mining companies, because they do less exploration these days, they're willing to pay well for major discoveries, and the best discoveries get a significant premium in the market, and so there's an opportunity there. And that opportunity is something that we can unlock in a number of different ways, either as takeover, joint venture participation, or someone else starts spending the big bucks, spinning out the project, mining it ourselves, putting the right personnel in place. or just an outright sale, which a lot of junior companies are doing now, retaining a royalty. So there's a lot of opportunities there. We look at the ones that make most sense for each specific project. So Nevada, as you well probably know, is one of the best places to explore. The independent Fraser Group or Fraser Institute in Canada typically rates each jurisdiction in the world, and Nevada is usually the top 1, 2, or 3. This year, I think it came back up to number 2 from number 3 previous year. This map that I'm showing here is showing in colors where the number of claims are located. And so we have the Carlin Trend, the Battle Mountain Trend, and the Walker Lane Trend. Those are 3 of the major ones. There's some other trends as well. And what you can see is the redder colors are significant land positions. And in fact, the red is probably there's no land to be acquired. Carlin's a little bit different in that there's a lot of private land, and so it's almost impossible to get a land position there. We've managed to get a very good land position in the Battle Mountain Trend and also in the Walker Lane Trend. Wind Mountain, I showed you that photograph as we began this. That's located in the northwestern part of the Walker Lane. And as I'll talk about, we're expecting drilling to begin in April again to follow up on a number of things. I'll go into more detail in a moment. The Highland Trend or the Highland Project is probably our second most advanced project. I'll talk about that briefly. And the other projects have merit. Sometimes we find something that isn't the gold and silver deposit that we're looking for. That's the case of Shoshone Pediment. We found a barite deposit. We're not in the barite business, but Baker Hughes is, and they have a facility about 6 miles away. So we've sold the barite rights, and when oil prices firm up and recover, they are in the process of permitting. They're kind of dragging their feet because of the oil market. There's not as much need for barite. That's one of the major sources or uses of barite. So we have a number of 10 projects, about 6,500 hectares. So it's a significant position in Nevada. Wind Mountain, as I mentioned, is our most advanced project. It's our flagship. You can see from the photograph here, there's some past production, and that's a clue. There's a gold system here, right? So one of the things that really caught our attention here is this is a high level epithermal system, and typically those have some feeder zone that's much higher grade, and that's primarily what we've been looking for initially. That when we first acquired the project, what we found though is that there's quite a bit of disseminated mineralization that we weren't aware of. We knew there was some that was left behind from the previous mining operation. They just didn't get around to mining at all. But we've expanded that significantly. So we've had a dual approach of looking at the disseminated mineralization as potentially a near-term production scenario, but also looking at the possibility of a feeder zone. And we've been gathering data on that over the years. Here's a picture of me standing at the edge of the pit. So, it's a substantial hole in the ground. We did a resource preliminary economic study in 2012. I'll talk about that in a moment. And like I said, the deeper source of those gold fluids has been a primary target for us really since we began. Past production was something on the order of 300,000 ounces of gold and just under 2 million ounces of silver. We own the property 100% right now. There's a 2% royalty that we can buy down to one of the majors. We have the resource in place, and we're working towards a feeder. You can see the resource break here. There's about 1 million ounces in all categories, about 25 million ounces of silver. This was done at $1,300 gold. We did a resource calculation. It showed a positive PEA and net present value. And you can check our website or look at this in more detail. So, a number of people have pointed out, okay, this is pretty low grade, but the situation is not the grade itself, it is the margin. And so this has very good metallurgy. There is almost no strip ratio. So, the mining costs, and it leaches very well. So, there's a very good margin for at least parts of this deposit, and depending on the price of gold, quite a bit of it. So one of the reasons you do a preliminary economic evaluation is you start with your base case and then you see what happens. So when you look at the price sensitivity, you see that as gold prices rise, not so much with silver, because silver doesn't recover quite as well in a heap leach, but in the heap leach type mineralization, you get up close to where we are today. There's a significant increase in the value. And you can do the same thing with operating and capital costs, although I think those have not really gone up to the same extent that gold prices have. So it's a nice leverage to gold price. When you look at the modeled pit, that's what we're seeing here in the purple color. This is the pit that would be mined at $1,300, and that's what the PEA was based on. The gray is topography. These little lines here, these are existing drill holes. In red, what we're seeing are blocks of resource that are called indicated. Now that just means it's one of the more densely drilled, so the higher confidence level there. The yellow are called inferred blocks, and those are less drilled, as you can see in here. Well, when you look at where the pit is, where the resources are, where they haven't been drilled out, we recognize that this steep high wall over here, all we had to do is add a few ounces in here, and that could probably pull that pit down to the south in this case. We have infilled that. We've not included that in the resource. There's not going to be a huge amount of resource in that area, but it's going to change the pit geometry. I'm going to show you a cross section right here. Because the other thing that we do is we look at the blocks and the model of how those are distributed, and a lot of times in between good areas of mineralization, the more drilling can confirm higher grades. So I'm going to show you that in a second. The other thing that you see here is that there's a number of blocks down in the south here. You can see that there aren't very many drill holes in there, and so this is a place where we might again be able to extend the resource as well. So this is that cross section. Here we are up here through the Breeze mineralization. So here we have a 50-foot zone of 1.3 grams. Here we have 85 feet of 1.4 grams, 50 feet of 0.68 grams, 50 feet of 1 gram. And in between that has a resource block that's given as 1/10 that value. So basically what you see is that with some additional drilling, we should be able to confirm that geological interpretation makes a lot more sense. So that's part of what we're planning for the upcoming drilling program. So that's this area, which we expect to be able to increase the grade of the resource. Here we expect to add some resources based on what we've drilled. Now, one of the other things that it's worth doing when you do a preliminary economic evaluation, you spike up the price of the value, in this case to $2,000 gold, and you see what happens. So what you see is that pit, even though we haven't drilled any holes, it will start picking up this mineralization. So it's likely that some infill drilling in here, potentially in here and over in here, will add some additional ounces just from drilling, not necessarily because of the price of gold, but just because these blocks are good enough to pick up assumed barren rock, and that's not likely to be barren given the fact that the mineralization is a lot more dispersed in this area. The feeder zone, we've got quite a bit of evidence that there's feeder mineralization in this area. We did 4 drill holes recently. One of the holes hit some very high silver. That's very unusual. It's in a quartz vein, which is also very unusual. These sediments, and the reason that we get such a wide dispersion of disseminated mineralization is because these are very permeable. As soon as the fluids that were bearing gold came up into that fluid or into that permeable rock, it just spread out all over the place. So the fact that we have the quartz veins in there, we'll drill a few holes in there to evaluate that feeder zone as well. So what's next? Starting late April, early May, whenever the rig can eventually show up, we'll be doing a very limited program on the feeder zone, just drilling underneath that high-grade silver vein to see if there's some extent to it. We expect that when we get into more permeable or more brittle rocks underneath those permeable rocks, that we may end up with a very nice grade vein type system. So, that's a very attractive target. We're going to do some infill drilling again to try to increase the grade of the resource we already have. And then in the fall, we'll be looking at an update to the PEA and well, the resource first and then the PEA. And we should have that by the first quarter of 2022. So, finding a drill rig is difficult. We have already anticipated that. So we have a rig already scheduled to show up late April. And we've done the permitting, so it's permitted and bonded. We're ready to go basically when the rig shows up. The engineering company has said that they're willing to do the update to our resource and PEA. They're pretty busy right now, so getting on their schedule is important. And then, looking further down the road, we think there's probably at least a phase 1 heap leach open pit scenario that would be very, very profitable. That's going to require some engineering and some metallurgical work, and then basically turning that PEA or that portion of the PEA into a pre-feasibility. So that's what we're hoping to do under a best case scenario. We start the permitting and we're anticipating that it could take maybe $2.5 million over a period of perhaps 3 years to receive our mine permit. So this is a pretty rapid transition from exploration into, starting up the shovels and starting the mining operation. So that's our Wind Mountain project. I want to just this slide shows our property. Whoa, we just want to take a look here. Position in blue. That's not supposed to be on there. Okay, sorry about that. So the other project I wanted to talk about is probably our most advanced exploration project. It's Highland. It's in the southwestern part of the state. It's part of the Walker Lane area in blue, including these recently staked claims is outlined here. This is a pretty large area. It's about 20 square kilometers. And a number of the geologic features are here. I won't go into those in much detail, but I'll point out where we've taken surface samples. And we focused when we first acquired this project in the western part of the area here. So anything in magenta color is over 2 grams. We have a high of almost 50 grams. The red are 1 to 2 grams. So there's extensive areas of gold mineralization. There's a little bit less, up to 1 gram here. Same thing, a couple of samples over 1 gram in this area here. So this is more deeply eroded than this area, and we focused our initial drilling in here in 2012 and 2013. Our best hole was number 13. We had 12 meters, excuse me, of 7 grams and 108 grams of silver. That included a spike of 50 grams gold and 345 grams of silver. So this is a system that's large. You can see it in an aerial extent. This little pod here, we've offset drilled around it. It turns out it's probably pretty small, but you get these sort of teasers in these big systems, and I believe that there's an excellent chance of finding a number of mineable deposits in here. One of the areas that we've spent quite a bit of time on is this Big Hammer target. And in 2018, this area caught the attention of OceanaGold, and they did a significant amount of CSAMT geophysics. They did some surface sampling, and they really reaffirmed our interest in this project here. We have values here, a lot of them in the sub-gram range, but up to 15 grams gold. And when we look at a cross-section through here, we see that there's a significant area of gold mineralization. It's basically covered through here. There's an exposure of what we call sinter. This is basically the surface of a hot spring system. If you've been to Yellowstone Park, you'll see big areas of these sinter pools. These are historic ones or prehistoric ones. These are things that are 15 million years old. They're still preserved here. And based on the geophysics, which is the color system that we're seeing here, there are a number of faults. We drilled the first hole with Oceana's funding through here. There's not strong mineralization here. There's alteration, there's low geochemistry. We got halfway down through the second hole. a lot of values that are pretty similar to what we get on the surface, and a lot of the textures that we believe are very high in the system. And unfortunately, we I guess lost our funding from Oceana, and our intention is to look at these deeper parts of the system under this area here, following this fault system to the south, about 500 meters away. There's another cluster of good grade surface samples. There's some shallow vertical drilling that never really got below this level, with intercepts over 1 gram. So, you know, we have a couple of pretty strong targets in this area here. You know, like I mentioned earlier, part of our approach is to, you know, potentially have joint venture partners that either, you know, plan to bring things into production or have some technical and financial ability to add to the project. So this project's generated a lot of interest. We have a project about, so I don't know, it's again 5 or 6 kilometers to the west, southwest, called Baxter. Very similar type of system, and there's a lot of interest in both of those projects right now. So this is the team. You know, you met Larry, and you're meeting me now. And then this is the board of directors. Larry mentioned that that Penasquito, this is the company that had it, Western Silver. I joined the company right about here. It's too bad I didn't buy a lot of shares, because it really did skyrocket, and a lot of people made a lot of money based on that discovery. So where are we now in that scheme of things? You know, the capital, we're about a $9 million market cap at 10 cents, pretty low. Our share structure is pretty reasonable, and we have a lot of warrants that are in the, well, at about the money right now. So we're looking into those for financing. We have about 9% ownership as management and close associates. So that's an overview. Happy to answer any questions and turn it over. So,
That was really very interesting, Joe. Could you just touch on my favorite subject, which is the permitting and any issues you think you might have vis-a-vis environmental issues, although you're in the middle of literally nowhere, and just keep me happy about permitting?
yeah, well, you know, we have a permit for all the holes that we're going to do, and we have yeah, something's noisy there. We do concurrent reclamation, so, you know, I think we're in pretty good terms with the BLM. This is a Bureau of Land Management, so it's fairly straightforward process. We're out of the sage grouse habitat. You know, it's too low, too hot, and there's not enough sage there. So, you know, that's an issue for parts of Nevada. In the biological study that we had done, they did not identify any issues with you know, species that are endangered or even close to endangered. The local people, we've given presentations. It's been a few years now, when we were aggressive a few years ago, to you know, let me see here. Yeah, there we go. So, you know, we did give a presentation to the nearest town, which is Gurlock, and their comments were, when can you start? We don't have enough in our school to have a basketball team. So, you know, back when the gypsum mine was operating, that was a pretty busy area. And right now, the only thing that it has going on are you know, some ranches, and that's where the you know, that's where the Burning Man thing is every year. So, you know, that brings in some people, but not very much money to the local town. So they're pretty supportive of bringing more people into the area. It's part of Washoe County. It's away from the population centers in the south end, that being Reno primarily. So yeah, I don't foresee any problem in getting permitting.
Any water issues?
Well, water is always an issue in Nevada. The thing is, though, that there's a geothermal power plant just to the south of us. So the hot water that they get, they have to cool to re-inject into the ground. And the way they do that is they ship water that's cold from across the valley, and they use that. And then so far, they've had a lot of fish ponds that they've filled up in trying to get rid of the water. So there's a potential to purchase water directly from them because they have to get rid of it anyway. So.
Oh, great. Okay. That's really interesting.
Mm-hmm.
Let me ask around and see if our panelists. Carl Dawson, do you have any questions today?
Yes, just a question on financing. I see that you're hoping to get warrants converted to provide as much of the financing as possible for the plan that you outlined, but at what point do you think a raise would be required, and what might that look like?
Well, it would depend on how much is exercised at this point. You know, there's, let's see, just under $1 million in those warrants. If all of it came in, then, you know, we're fine for the next round of work. Obviously, if the market is such that you know, you can do a financing under favorable terms, we would do that in anticipation of additional work. But yeah, so, you know, that's kind of where we're looking right now. If the warrants don't come in, then we have enough money to get started on the drilling program, and we may have to do a short raise to, you know, to complete everything we want to do.
Right, and then just a quick comment. I'm very pleased at this new plan focusing on the infill drilling and developing the resource a little bit more based on the higher gold price and the new PEA. I think that's really very important because to me anyway, the basic value proposition of Bravada and Wind Mountain in particular has always been the value that's already there. Finding the feeder zone would be great, but the real value that's already in place and is hugely underrated by the market is what we already have. So to build up that incrementally, I think is a great idea. Thank you.
Yeah, well, it de-risks the project by filling in, you know, when you look at the resource distribution, you know, the engineering companies want to make it as big as possible. And so what they do is they take in a lot of area that isn't well drilled. This area is well drilled. So our focus is to do some of that infill drilling, convince the engineers that this is why we should look at a more narrow zone, do the statistics on that, and we should come up with a much higher grade. Well, not a much higher, but, you know, if we can come up 50% higher grade, that's, I don't know, that's significant in a property like this. You know, the benefits of having it basically be on the top of the hill is that you don't move very much rock until you get to the, well, I mean, you're right there sending the material that's going to go to the leach pad. You know, there's no pre-strip, it just, you know, start producing ore. And that's important.
Great, thank you very much.
Okay, any other
Howard
questions?
Flinker, are you with us today?
Would you say, Doug? Sorry.
Howard Flinker, Howie Flinker, is he around today?
I'm here, but I have no questions.
Okay. Jay Jonas, do you have questions today?
Oh, Jay's with the company.
Oh, I'm sorry. Okay. Matthew Geiger.
Yes, I'm here. I have a couple questions. Can you guys hear me?
Yep.
Yes, we can.
Wonderful. Good to see you again, Joe and Larry. Joe, can you touch on the previous Wind Mountain PEA? I believe back in 2012. Kind of refresh us on the economics there as we're looking forward to this updated PEA. Any obvious areas you think the company can improve upon that can improve the project?
Yeah, well, there's a number of things. We've done a couple of what if scenarios and looked at the possibility of actually doing a smaller mine, but focusing on the higher grade. one of the advantages that we may be able to take, or one of the issues that we may be able to take advantage of, is that there's a small area that we thought had exploration potential. And so when we were doing the PEA, we made the engineering company look at a heap leach site that's quite far away. So, you know, if you're moving 1 ounce of gold, you know, 1.5 miles, that's one thing. If you're moving it in 100 tons of rock, that's quite a different scenario, right? So, you know, the transportation cost to that northern area is significant. So we looked at the possibility of doing a phase 1 pit that would encompass just the amount of best grade that could go into that near site. You know, that it's basically at the bottom of the hill. So you roll the loaded trucks down. So that would drop the cost of moving that material significantly. So that alone can be, you know, would probably make as much money as the PEA did trying to make it much bigger. If we can get the grade increase that we expect to get, then that's going to make it even more profitable. And, you know, you can, once you get, we're pretty close because the drilling is very dense in that area. We could actually start that as a PEA, and well, as part of the PEA, kind of limit that area, and then turn that into a pre-feasibility pretty quickly if we get the engineering and metallurgical work to upgrade that. So with those type of documents, we can then go and begin the permitting process. So we could jumpstart this by basically making this a starter pit, if you will, and then the bigger operation would be contingent on what else we find, you know, what the gold prices are in the future, you know, where we, you know, what would be the cost of moving to another area. Once you have a mine in production, of course, you know, permitting issues and all of that become a lot less of an issue than in a startup. So, you know, extending the mine life when there are people working is not a bad approach.
Wonderful. And how many meters do you contemplate drilling in this upcoming program here? I believe it's a relatively small program, but how many more meters do you anticipate drilling before the PEA?
It's about 2,000 meters, so it's not a huge project, you know, program, and there's a number of holes. A lot of the ones in the resource are pretty short. Some of those are less than 100 feet, so it's just, you know, burn it down, get it into the lab. A little bit deeper on some of the targeting that we're going to do to offset the, you know, in search of the feeder zone. So.
Great. And one more quick one. I unfortunately have to step away from the computer when you're talking about the Shoshone pediment property. Can you just give a quick update on the timing there, when you guys can reasonably anticipate first cash flow?
Yeah, that's difficult to say, because barite is something you know, you mine, you grind it, you put it in a bag, and you sell it. So, you know, the lag time is very short, and that means when oil prices go down, the reverse is true. They can shut down pretty quickly, and so they've really pulled back on even their permitting process, as far as I can see. They were pretty far along, so, you know, hopefully this time, you know, they don't stop midway through some of their long-term tests. You know, the issue with barite is not the barite itself. That's pretty inert. That's one of the reasons that you use it. But, you know, the rock around it can oftentimes have quite a bit of sulfide with it. So there are some issues with you know, acid drainage and that sort of thing. You know, the groundwater is pretty deep out there, so it's hard to imagine that that's going to be a significant issue for them. The bigger issue is, you know, we need oil rigs to start drilling again, and then, you know, they'll be up and permitting and trying to feed their mill. They're basically, you know, pretty well out of ore. They were going to be pretty much out of ore by now on the mine that they've been mining from, you know, for, I don't know, a couple of decades now, the Argenta mine. And so they were going to our ground next. But again, because the timing was dragged out with the price of oil dropping, that, you know, I don't have a specific answer for you.
That's fair.
Just watch the price.
Yeah, but you're keeping an eye on it, and I assume you'll you'll keep us updated, if such when we see movement there. The sooner the better.
Sure.
Wonderful. All right, thanks, Joe. Appreciate it.
You're welcome, Matt.
Nancy Marchand, do you have any questions today? Are you with us, Nancy? Unmute yourself. Well, we'll have to come back to Nancy. Scott, do we have any questions from the audience?
Yeah, I see Mr. Mosseri's on. Does he have a question?
Jeffrey Mosseri, do you have any questions?
Thank you very much. I had a series of questions, but they've all been answered. So thank you very much. That was a very good presentation.
Thanks, Jeff.
Yeah, we do have a couple questions from the audience. The first one is, can you speak about the infrastructure that is near the property, power, roads, and anything else that might be needed for the mine?
Yeah, well, there's a county road that connects the pavement to the geothermal power plant. There's a small community that was associated with this large operation, farming operation. So we actually rent a house when we stay there, and you get, there's sites for trailers for people to stay and that sort of thing. So there's no problem there. The geothermal power plant itself was originally a processing plant. They were growing vegetables and then drying them and then shipping them off to China. That stopped a few years ago. So they actually have quite a bit of, there's office space there if we need it. There's also, the possibility of maybe not having to do some of the things that you do capital. It's like an office. And it's just something for the engineers to kind of pencil out. Does it make sense to use the the shop that's at the geothermal power plant? I mean, that's a possibility. Or is that too much travel back and forth? I mean, it's only 6 kilometers, so there's quite a bit of infrastructure already in place. There's a large power plant or power line that goes from Lake Bonneville to Los Angeles. We can't tap into that, but there is a power grid for Nevada Power. It comes from the geothermal power plant and then connects up to the mine site. It's not connected right now, so we'd have to reconnect it, but all the power poles are in and the lines are out. So there's water wells. Yeah. So, we don't own the water rights. The previous company, Amax Gold, sold the water rights to the geothermal company. So like I said, there's a possibility of potentially getting water from them. So there's quite a bit of infrastructure.
Great, thank you. Another question is, are you currently getting a barite royalty? And if so, how much cash does it generate for the property you sold, I think?
Yeah, we sold the barite rights. We still have the other rights, and there, it's kind of on trend with some of the gold mineralization farther to the southeast. We're not actively pursuing that just because those would be pretty deep targets, as we found out. So it's not in production right now. They were permitting it to be in production. This is a couple of times they actually had told us that they were going to be in production within like 12 months, and it hasn't happened. Each time the price of oil has gone on down, and then they kind of back off on their plans. I have not had an update from them, and so I'm not quite sure where we stand at this point. They're supposed to provide us with a large document talking about their operation, how much reserve they've identified, and that's a public document, so we're supposed to get a copy of that. Right now, it's a resource for us in the future.
Excellent. Great. Well, thank you. Last question from the audience at the moment is someone came in late and wanted you to go back over your plans for looking for the feeder zone at Wind Mountain in terms of what your upcoming drill plan this year is for that.
Yeah. What has given us some encouragement is this one quartz vein that has some textures that are something we haven't seen before. You know, one is the very high silver, you know, 269 grams per ton silver is higher than we've seen before. Now that can happen by just weathering and some enrichment. So we looked, you know, under a binocular scope, and we've identified there's silver bearing sulfides there. So this is something different. This is the hot part of the system. It hasn't been enriched. This is, you know, the primary grade. It's much more silver than gold. This is what's typical of the top of an epithermal feeder zone. So when you look at the textures of the quartz, there are breccias in there. It's surrounding quartz. Again, that's something we haven't seen before. We did not see evidence of boiling in the vein. That means we're probably above the boiling zone. The boiling zone is where you get this big chemical change and gold drops out, and you know, it can be very, very rich and over a very short distance. Many of the feeder zones in mines that are active are either unimpressive, in some cases are completely blind. So, you know, you can go from virtually nothing to something spectacular in a very short order. So because we have this one little point of upwelling, and we don't really know the geometry of it, right? So what we're going to do is drop down about 100 feet and then go 100 feet on each side of it, making a triangle. And then from that triangle, we should be able to understand, you know, basically a 3-point problem if there are any geologists out there. So we can understand where the projections are. And, you know, if we can do that while we're drilling, then we may add another 2 holes, you know, to kind of test the fact that it gets projected in one direction or another. We may not be hitting the right, you know, the absolute best part of the system, but we did have a part where fluids have come up higher than we've seen before.
Thank you. Yeah, that's the questions from the audience. I want to thank the audience for sending in those questions. And I'll turn it back to you, Doug.
Okay, so gentlemen, do you have any last thoughts you want to leave us with? What's the one thing I should remember?
Well, I'll just take a stab at it from a technical standpoint. You know, I think we're in a very good position if gold prices are expected to rise, and you know, it sure seems that case long term. We have an asset that's undervalued, and we have a number of other projects where, you know, the discovery is. So, Larry, did you want to add something there? Or?
We're getting a lot.
Well, I certainly won't be as technical as Joe, but this company has traded much higher than it is now. It's kind of drifted while we had the drill program going, and we had such a bloody lag time waiting for assays. People lost daily interest. I know that I'm exercising my warrants, and I've got a lot of confidence that Joe's going to apply some science to this project and see if he can make a fist of it. And so, you know, the stock's trading at around 10 cents right now. I'd encourage people to be in the market at this time, get free trading stock, and we're not going away. We're going to continue drilling this, and we expect that long-term shareholders who have warrants will step up to the plate. We'll see. We're talking to them. We're encouraging them to do it, and we're showing that the reward for the risk is substantial. So that's my pitch, and that's my pep talk. And thanks for listening to us.
Thank you, guys. Very interesting. Thank you all.